Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, the 12th of October, 2020. And here we are approaching 6:45. We had a big up day in the stock indices today, enough where you're reading articles now that we have recovered and out of the correction in the NASDAQ, not quite in the other indices. It could happen. What's the definition of coming out of a correction? A correction is defined as dropping 10% in price. In order to end that 10% price in stock indices, you've got to get back and make a new high over where the market peaked. I'm giving you the rough part of it, but it's a good definition. And you did that in the NASDAQ. It's still the strongest on the reopening tonight. Keep in mind my Tuesday, beware. Big up days on a Monday often lead to what? Tuesday's trying to reverse. Now, we didn't get a lot of economic data today because of Columbus Day. We'll start picking that up tomorrow. You know that the nomination process is moving ahead in the Senate. You know that nothing has come of the COVID relief bill, and it doesn't appear there will be one. Actually, who had it right was Mitch McConnell. As much as the president talks and Steve Mnuchin and Larry Kudlow, you know, he knows his game. You got to give him credit. I thought that he might be out of touch with all, but I'm thinking he has his finger on the pulse, and there's not much going on to pass a bill at this point in time. It's all going to wait probably until we get past the election, and whoever wins, that's when the country will get its COVID relief bill. That's what I'm thinking. Now, if we take a look at things, the metal markets are fairly flat tonight. Bonds and notes, pretty flat. We're getting a small bid in the energy complex after a big break today in most of the products along with the crude itself. We were up sharply in the nat gas, but now they're bringing those platforms back online. As of yesterday, about 62% of the platforms in the Gulf of Mexico that produce natural gas were offline. Over the weekend, it was over 80%. Now we're down to 47, and by the time we wake up, it'll be smaller than that. So that's going to weigh on this market just a bit. The damage wasn't severe enough to put anything out of reach. And in the in the energy complex, Port Arthur, Texas, they're just about back up, getting normal on the refinery that lost its power, and it's coming back right now. It's up to about 250,000 barrels a day right now again. In the S&P, how do you argue this? If you look at a weekly area chart of just closes, here we are. You're up 57 points for the week on the first day and a quarter of trading. Remember, we're already into trade, if you will. It's not even a quarter. It might be a day and 1/23rd, something like that. And that's about where we're at this point in time. But that's powerful. The correction never did carry to the 18-day average. I think I was right when I said, be careful here. Not here, but right here. When we closed like this, I said, be careful. And I gave you a chart to look at. So let's go back and look at the chart that I was showing you last week. If you'll recall, I had given you an inverted head and shoulder. Shoulder, head, flip it over, neckline. And if you break out and close over that, the market, other traders see this, I'm not the only one seeing it, you start flipping this. It would be almost, I wish I had the graphs to do it, to grab it and pull it. And from the neckline, it would flip over equal. Could be headed as what it is into this 3,600 range. Not too bad so far. I think you'd agree with me. We know it's going to have some resistance, or should, in this general area. We get a bunch of bank earnings tomorrow. Beware of that. They start tomorrow and they go right through Wednesday, so you got all the big boys reporting. But the expectations are for good numbers. The surprise would be bad numbers. And no, most of the banks won't be putting away reserves. They've already done that. So we're into something else now. We're also at that period in stock indices where the market is counting that corporations, that the third quarter's over, and we're going to really show better numbers than we did in the second, and we're really going to start humming right now. We'll see. You've got the pattern of higher lows, higher highs. The last swing line low was at 33.32 and a quarter. We have since run 200 points from that number. Pretty big run up, as you can see. You held and fought at my line in the sand. You'll hear me over and over say that the 18-day average is the line in the sand. I teach in my charting course, which you can view on our website under the word education, that is a number that markets like to go to figure out what to do next. So you get under them, they'll rally to it, it fights, it tries, maybe it falls back, but once it breaks away from it, has a tendency to make a run. And you're always looking to see what the Bollinger Band is doing, because if they get real narrow, you get false moves. You don't have that. The market ran up to the Bollinger Band, stalled, and now you have what I call a gorilla glue trade. What does that mean? Well, we all know what Gorilla Glue is. It's supposed to be that very powerful glue, and that's what this is. When the market starts hitting the S&P, it just stays against it. And that's often, not always, accompanied by first a market that gets overbought and then embeds. Embedding means that the slow stochastic reading sees both numbers lock in over 80 for several days in a row or more. You can't count today, so you go back to how you closed. When I say today, this is for Tuesday's trade. We look at Monday's trade, both numbers over 80, both over 80, not on Thursday. So tomorrow's a very important day. Will it embed? Don't make this judgment right now. You only stay over the upper Bollinger Band 5% of the time, and big Mondays often lead to an attempt at a sell-off on a Tuesday. I'll wait and reserve my judgment. In the NASDAQ, it's the same pattern, or is it? We can't count today. So Monday, both numbers over 80, both over 80, but not. Identical pattern. Over the upper Bollinger Band, will it stay over it? Only 5% of the time. This is not trending like the S&P. The S&P had the higher lows, higher highs. This market went into a lower low and a higher high pattern. Just interesting. I'll be looking to see, do they embed? When they embed, what most people do is they go, oh, the market's overbought, it can't keep going. Well, it can't keep going if it loses the red reading back under 80. That I agree with. But until that happens, it takes guts. But you gotta play what the embedded reading's supposed to do. The Dow is in the similar thing. It's now trying. It hasn't made it quite to my definition of the Gorilla Glue trade, but it's really trying to hug in against it right now. There's nothing bearish on any of these markets. That's probably the best thing to say. This is absolutely the Gorilla Glue. Now I start looking, is the market going to break away from it? Now let me give you the warning. Today's high was 1651.70. The upper Bollinger Band, 1660.28. You didn't hit it. You're not hitting it tonight. Now you got to be careful that you want to get something of a correction going in this market. If it hits the Bollinger Band, then I will take that all back, okay? But it's starting to roll away from it. In the VIX cash, the cover of the short position, I think, was on Friday. First challenge of the lower Bollinger Band where you hit it. You're oversold. Doesn't mean that I'm bullish. I'm not. I still see plenty of resistance at 26.97 to 27.22, but oversold, hitting a Bollinger Band, for me, that's enough. In the T-bond market, still in a downtrend, but an interesting event happened. Would you disagree with me that we have an outside day down on Friday? My rule of thumb is if you take out the high of an outside day down, you've sprung the trap, like a mouse trap. You've caught the bears at that point in time. And if you catch them, in order to keep them caught, you can't afford to get back under the low of Friday. You took out the high, and you're trying to move it up at this point. As long as you don't take that number out, my target is back to the 175.21 level for whatever reason. Did the same thing happen in the 10-year note? No, it did not. You have not taken out the high of Friday, but you are very oversold in a downtrend that's met all my downside targets. I could easily see, for no reason at all, this market trying to get back to the 100-day average of closes. In the dollar index, still in a bear trend, but oversold. Lower highs, lower lows. I had one important target number that I never show on these charts. My subscribers and my research see it. And I explain it all the time. I won't give you everything that I do for them here, but suffice to say today's lows was right against that number. So that's one of the first cover areas. The second, if the market can continue down, is around 92.77. Be careful of the oversold condition. And no, I don't think the bears will be aggressively supporting the market or resisting the rally because it's oversold. Be careful with that. Euro. Overbought. It's the mirror image the other way, the reverse. Higher lows, higher highs coming into my resistance points right now and overbought. The Japanese yen. Boy, this one worked out really neat. Here's the market with both numbers under, and I think you'd agree, 20, not the day before. Day 1, 2, 3. You have an embedded reading. My rule of thumb is when you have an embedded reading, you're still bearish. But if you lose the reading, the odds favor prices are going to make a run back to the 18-day average of closes. You'll, on the next day, lose the reading and tell me where you go. So I'm getting just what my work would call for. And there were ways, I have rules that when I redo my course, I've got so many areas here that I want to give new rules to because you keep developing them. They alter with the market. You learn new things all the time. The stuff I do is visual. I'm not writing computer code to look at all this. It's not about that at all. It's, if I can't teach it, what good is it? And that's, to me, what it is. You should be able to do what I do, and I think you can. In Bitcoin, bullish. There's nothing bearish here. You're starting to hear that the Bank of Japan is now pushing the government that it wants to get further into the digital currency era. I think more will. But these digital currencies won't be like a Bitcoin and an Ethereum. They're not going to be ones that are not without your name attached to them. They're going to make it where they're going to be able to follow you. And that's going to be the new digital currencies that come out. They'll work over your phone. They'll work in different ways. They are not going to be anonymous digital coins. If you think so, get serious. What government doesn't want the tax revenue or to be able to follow the money in some way? None. In the Brent versus WTI Crude, you're fighting the battle now at the 18-day moving average of closes. So the 165 area is giving ground to the 190s, but you're still fighting that battle. As you can see, the break in the market, you got down to 41.35. And if you take a look, the previous low here was 41.36. So you made a lower low. So the market now has a higher high, lower low. It's out of the uptrend. It had gotten overbought, and we were talking last week that this market was fighting between the 18 and the 100-day average. It had been in an uptrend. That is over at this point in time. And the same identical thing happened in the WTI Crude. They're not in downtrends. They're just not trending at this point. Heating oil. The break now. It did not take out this last low, but momentum is already turning down on you. Be cautious. Now, with heating oil, and that I've moved to heating oil, no longer gasoline. What's going to be in demand through the winter? This is the market we've got to start watching. So this is what I'm going to watch. Now, admittedly, heating oil is also jet fuel. They include everything in this contract. So important to keep your eye on that. But you've got now some divergence, an overbought situation that's trying to correct. And in the nat gas, you got up to your target, that upper Bollinger Band. What do you do when you're knocking on the door? You got to take some money off the table the way I teach charting. You don't have to do anything. But if you're my student, if you've taken the course, you know what I teach you. You just missed it, in all fairness, here by... let's see, a penny? I'm laughing, 0.8. So I feel good. It did the job. And what I tell you is, as it gets up there, you have your order in, it's not there and it's knocking on the door, just move. Okay, take something off the table when you get a good trade like that, because the odds of it staying that good when it gets to that zone, problematic, especially if you didn't get a disaster off of Hurricane Delta, which you did not in terms of hurting the energy complex. Certainly human disaster. I see that and I'm sensitive to it. I had lived in Florida, so I know very well what the damage this can cause. Want to remind you what we do. Over the weekend, for those of you that have taken my offer and signed up for our market research, what did you get? You had reports coming in Friday night, Saturday, all through the day you were getting reports. Sunday, before the markets opened, you started getting our recaps, what's going on, what to start looking for through there. It comes to you, our research, in two different ways if you haven't tried it. First of all, it's a 2-week trial. It can come by email, or you can go right through our charting programs, and you can try those for 2 weeks as well. We cover all these areas, and it's not one report. There are reports, then oral commentaries, a lot of commodity information. Why? Because a lot of people don't provide it. We do. So we'd like your account, your trading account. We want to give you reasons to be with us. Part of it is research. Go to www.iraepstein.com. Take a look at what we offer. Sign up for our free offerings. We'll put it in your pocket. I'm Ira Epstein. I will see you all tomorrow. Have a great evening.